All right, good morning, everyone. Today is Wednesday, 4/27/22, and it is a couple more days left in April, two more trading days, 3 more days left in April, and then we're headed into May, which begs the question, should you sell in May and go away? Interestingly, I saw something on that last night that was an old adage from way back in the day, but more recently in recent history, and I should have saved it, but I forget the exact figures, but more recent history, like over maybe like the last 10 years or something like that, May's actually been a halfway decent month, but as you probably know, I don't put much into seasonality at all. Interestingly enough, April, the month that we're in now, is historically the second best month of the year, and the S&P, I believe, or the market, when they do these historical stats, I don't know if they use the S&P or the Dow, but anyway, up 80% of the time, and of course this year is a bust. It's gonna be a bust for April. I'm pretty sure of it. It would take a pretty tremendous rally from here to turn April around. But anyway, speaking of which, let's I just wanted to look at something real quick. Let's go to the monthly chart. There we go. Monthly chart's pretty interesting, and of course, like I said, there's only well, there's today and 2 more trading days. And so look at this April. Wow, the April that we're in now. And so it's literally impossible. It would be literally impossible. They say nothing's impossible. I'm telling you, it's impossible for between today and the next 2 days for this thing to go green and be an up month. That I would say is impossible. I wouldn't even give it a 1% chance. But anyway, besides the point, that's the whole thing. Like at the beginning of the month, they like to come on TV and get you all excited about, all these stats like April seasonally, the second strongest month of the year, up 80% of the time. Those are the stats. But over the years, we've seen so many times where, um, I remember one from years back. It was one year we had like the best August in 20 something years, and then the following year we had the worst August in 30 something years. And so I'll tell you, this year so far, I've looked at a lot of charts. This year reminds me of, well, it reminds me of a couple of things. Like the chart kind of reminds me of 2018, and a lot of what's going on reminds me of back in 2015, 2016 with regards to China and all that. But anyway, yeah, last month, the market is actually considerably off the highs. It doesn't look like that big of a deal on the monthly chart yet, but when this monthly chart closes, it's going to in a couple of days, then it's going to be more interesting to look at, obviously. But you got last month's low and you got that month's low. And let's look at the Qs. I mean, it's kind of weird to look at the monthly charts, but I mean, yeah, we are only, a few more days to close the month. And so look at the Qs. I mean, we had a big rally this morning and it's starting to fade now, but right out of the gate, I think that, I think that the conventional wisdom going into this week, from what I can gauge, is that the market was extremely oversold and due for a bounce. And I'll go to the daily chart here real quick. I'm getting sidetracked here, but anyway, so forget about the seasonality. But so coming into the week on Monday, and recall that this sell-off, we had the big counter trend rally there that took it above I had like a resistance line drawn somewhere in the vicinity of 4,600. I mentioned a couple weeks ago, or even back over here. They managed to poke it above that, and then we started fading down, theoretically on rising interest rates and a hawkish Fed, and then kind of selling down a little bit, and then this is like super insidious. I have to draw this on here just to show you how insidious this is, right? So you had like this, however you drew this thing, I mean, some if you were using candlesticks, you'd have drawn like trend line like that, like nice little channel, right? We had a nice little sort of bullish channel going on here, rally and then a little pullback, and then if you're using candlesticks, you could have drawn it like that. If you were weird like me and you like to draw it across absolutes, the absolute highs, you could have drawn it like that. But regardless, any way that you drew that trend line, it got broken to the upside just in time for Jay Powell to talk all crazy hawkish on whatever day that was. That was last week. I think that was last Thursday. And so everything was starting to look like it was, nice orderly pullback, starting to rally, and then Jay Powell opened his mouth and just turned the market around that day, torpedoed it, and then you got the follow through to the downside, which was kind of like almost like panic selling, right, on Friday, and then Monday, gap down, a little follow through, and then that reversal candle, and so just everything that's happened here, right? I mean, that's like there's three things on this chart. This little breakout above the sort of double top over here, this little breakout, I think a lot of people, by the time they ran it all the way up here, people were thinking, okay, the worst of the sell-off is over. See, that's the whole thing. Everybody wants to know, is the worst of the sell-off over? So, it's okay now. Anyway, so that was the first sort of fake out right there, and then nice orderly sell off, and then they started rallying it up, and that was the next fake out when you got like that trend line break, and it looked like we was gonna continue to rally back, and then the final fake out was the one that happened on Monday, right? Where I mean, typically a chart pattern like that is a perfect sort of pivot low reversal. The very next day you expect to see, rally up to at least up here to about, 43.75, like kind of partially up into this bar. It's kind of a typical, that's a typical, and plus, got kind of oversold here too. Let me see if I can pull this up and show you the RSI. Yeah, and so we over here, RSI was getting pretty oversold anyway, right down here. But yesterday was yesterday was just brutal, I think, because like I said, the conventional wisdom coming into the week was for an oversold rally, and I think given Monday's price action and just given the price action in general, I think a lot of participants were looking for a rally back up close to 4,400 and then going to reassess, and then yesterday just, I mean, it opened and dropped. It opened at the high of the day literally, and then dropped and closed at the low, and so CNBC's broken out the markets in turmoil. And then so today's going to be kind of interesting because we had this humongous rally at the open. Well, I mean, about 40 S&P points from the open to the high, and now it's like fading back down. If this thing goes negative and breaks yesterday's low, look out. Yesterday's close was the third lowest close of the year. Let me just get the year to date on here, right? Make it easy. So, this was sort of an anomaly. I have trouble remembering that day, but you had a big sell down. You know, you were at the lows of the year, and then a huge gap down, little follow through and a reversal. So, I mean, that really sort of sticks out. If you turn this into a line chart, this disappears. You don't even notice that day. But that was the first capitulation day of the year. And we got a little rally, a little sort of retest of the lower end of the range. But I mean, here we are. We're back at we're right back near the lower end of the range, and and we're headed right into sell in May and go away, which quite frankly, May could actually, it's hard to say, because here's the thing is I believe it is next. Look at my calendar here. When is the Fed decision? Is it on Thursday the 12th, or is it on Wednesday the 11th? It's on Wednesday. It's usually on the day I do the show. So, or I'm sorry, the 4th. What am I saying? It's May the 4th, which is 1 week from today, is when the Fed is expected to raise 50 basis points. And the funny thing is, I watch some of these people on CNBC, listen to their opinions. Back here, when the market was rallying, even over here, a lot of these people have come on and said that it's already priced in. It's already priced in. And so, I mean, if it was already priced in, then it wouldn't necessarily have tanked when Jay Powell started acting all hawkish, right? So, and they love to say things are priced in because everybody has the same information, and we all know that the Fed is embarking on a rate hike cycle. And right now, I think there's a lot of I know for a fact there's a lot of confusion, because I see people come on CNBC and be like, oh, the economy's improving, the consumer's in great shape, this and that, and then you have somebody else come on and say the exact opposite thing. So I know that there's a couple of big what's called elephants in the room. One is obviously rising interest rates and how that affects mortgages, right? I've seen some stats on that. Housing affordability. There's actually a lot of stats out there that are at multi-year, like inflation. Inflation's at 30, 40-year highs. And housing affordability is, at multi-year lows. And so interest rates have gone up. Mortgage rates, I should say, have practically doubled, right? I mean, they were 2 to 3% not that long ago, and now they're 5-6%. And so that's a big deal, because sure, there's a lot of cash buyers out there. Speaking of which, I think the housing numbers came out. I might have missed them, but anyway, housing affordability is dropping, and so it's like we learned nothing from the last housing bubble, right? So there's a lot of cross currents, and then you got the big one. What I talked about before is the slowdown in China, and I should say the lockdowns in China are going to wreak havoc. I mean, out of all the news, that's one's just now starting to gain a little bit of traction. But the thing of it is I remember back in like 2015, 2016, the mere hint of a slowdown in China, caused a lot of market turmoil. And right now, I mean, it's way, way worse, with them having locked everything down and all the craziness going on over there, and the so anyway, long story short, things are kind of a mess right now, and we haven't had, as you know, I'm gonna try and fix this chart here. There we go. As you know, we have not had a lot of activity so far this year, and one of the someone emailed me and said, hey, what's going on? Hasn't been much going on, as far as swing trades and that. And I was like, well, so far this year, if you start, right here at the beginning of the year, the market like sold off basically right at the beginning of the year, sold off hard, right? And so by not having, bunches of swing trades open, we totally avoided that. And so, and then, this little bounce didn't really make for much of a swing trade. So the only little upcycle we missed was this one in mid-March, which was kind of, it was coming off of like, we were practically in a bear market here, and we caught that one really fast bounce, but there wasn't a whole lot of like really good swing setups, and so I think we had a couple. But same sort of thing now. The system's trying to. There's a couple I deleted because they were coming out with earnings. Yeah, we had some pending trades that just like this Zim here. Um, this was sort of shaping up back over here, and then and then it just broke down, right? And so once it broke these lows, then it was just off. So typically, something like this, I mean, it was kind of setting up. Now it's a pretty ugly chart. It looks sort of like a head and shoulders, but that was one. And let's see, one time a while back, we had Ford was on the list, and then it broke down too. Like back over here in February, Ford was kind of setting up. A lot of times you get like that earnings gap down, you get a little bouncing around, and then you get a rally. But that's another one that got knocked off. So right now we have JO, which is it's funny because over the years, this at different times this hits the pending list, and there's not a whole lot of, well, this is actually an ETN, but there's not a whole lot of ETFs that hit the list, but this one is one that we've seen, and I don't have the marks on this chart for past trades, like even years past, but it goes through some pretty good cycles, and so this this is kind of set up. Now I know it's gappy, right? So one thing on something like that's gappy, like an ADR or an ETN or something. Sometimes it's nice to turn it into a line chart that eliminates the gaps, and so there's some potential here. I mean prior to yesterday, it's starting to kind of shape up. So now if I draw a trend line up across these lows, it wouldn't look. There's a lot of charts like this too, where you can sort of draw an upward sloping trend line across the lows, and if it breaks down, look out. But there's three lows here for it, but it's not a bad looking chart. So, and the other thing is that we're right smack in the thick of earnings season here, and so anything that's like coming out with earnings in the next few days, or actually like there's like a cutoff, and it's about a week and a half, to 2 weeks. Anything that's getting ready to come out with earnings, um, there's no point in trying to take a swing trade in it, because as you know that typically when they start off, the trigger line is well above the current price. It's got to rally up and prove that it's rallying up. Like I can sort of if I look at this close enough, I can sort of visualize like a big sort of, well, like a W pattern forming and a big rally back up here. So it's going to be interesting to see. Commodities have been really strong, and then all of a sudden they got whacked, right? And so that's very typical. Commodities and energy and all that. That was the hiding place for everybody. That was the big sort of look at the whoops, what was I trying to do? I was year to date, right? Like, they sold off initially with the overall market, but then the money started going into metals and mining and energy, right? And then, whoops, typo. And then look what's happened since Powell started speaking. I mean, the XLE year to date was, up here at the highs. Tremendous rally since the beginning of the year. And then, boy, they got whacked too. Um, the old, remember years ago, we used to talk about, whoops, what, boy, I'm really, XLF. All right. I'm still on my second cup of coffee. Look at XLF this year, right? I remember, over the years, how many times have you heard someone say that, financials do well in a rising rate environment, right? So, I used to hear that a lot. So, want to see something crazy about XLF is the monthly. The monthly XLF, started, basically, it's had, well, there was the pandemic, but since the pandemic low, the financials have been extremely strong. And then all of a sudden this year, looking very toppy. And so I'm not sure what that's saying, but I know that just sort of looking at this chart, this time around, it just doesn't seem like the financials want to do all that well in a rising rate environment. And financials are the sector that's like constantly buying back shares and, low PEs and good earnings. So I'm not sure what the implications are, but it's been kind of brutal. There's Goldman Sachs. Goldman Sachs, it's a nasty looking chart. I mean, that's a really sort of nasty toppy looking chart. I mean, that doesn't mean that it can't, zigzag back up to here, but bigger scheme of things, let's look at the weekly there. Bigger scheme of things, when I see a chart like this, right? And I'm sure you guys have seen a bunch of examples of this. It reminds me of there's so many of these sort of high flyer momentum stocks that have this is an extreme example, but there you go, Peloton, right? I mean, look at this. This is insanity. $25 to, up here, $25 to 170, right? And then round trip. It's just crazy. And Zoom, remember the pandemic, the pandemic darling Zoom. And so these kind of parabolic moves. I like to use the analogy of them. Stock charts are kind of like a mountain range, right? And so stock charts are like a mountain range, and a lot of times, once you cross the summit, then it's all downhill. So I'm getting a weird message here. I'm getting a little YouTube error message, so we'll have to see how the recording turns out on this, but no big deal. Anyway, so the point is that it's just been a brutal market all around, and the best the best thing that can happen is to try and not lose money until we get some sort of a resolution of a lot of these things. Look at the Russell 2000. It's breaking down to back to 2020 lows. I believe the Russell and the Nasdaq are in bear markets now as we speak. So, yeah, another real insidious chart. You guys remember, on my list somewhere, well, not on my list somewhere, but on the Russell in my list. Let me see if I can find that. Might as well. You had this big box drawn around the price action all last year. There was that breakout right there, and nothing like a nothing like a 8-month consolidation and a breakout to the upside to suck people in, and then right back in here, and then a breakdown, And I mean, look at this thing now. And so that's pretty ominous. Everything about this is ominous. So anyway, we looked at JO, which is a pending stock, and then we had another one trigger in, which, and I was been afraid of this too. I mean, very little activity, and then here you go. This one's tagging the stop here today, right? I mean, it's it had a decent little pattern going, and then we literally got triggered in on Monday right here. Big up day. I mean, kind of, it's a pretty volatile stock, but this up day on Monday was, I think it was like 6% or something crazy. This is a pretty high volatility stock. And then for it to retrace the entire thing yesterday is kind of out of the ordinary. But then again, market tanking or whatever, and so it was kind of on a pretty tight leash, right? Stop just down here like under 60 rather than being, which is fine, but rather than having the stop down at the bottom of the pattern, basically, I guess I think what the system might have been thinking here is that move below and then back over the 200-day or whatever, that was basically going to be it. So probably better to have a tighter stop. I mean, in theory, well, I hate doing that, but I believe the stop definitely is getting tagged here. In theory, a better stop may have been down there. But we like to keep the stops really tight, so that's unfortunate. But I mean, hey, based on the price action, I mean, I see a lot of stocks out there that just absolutely in a couple of sessions get destroyed. And so, anything in this environment, anything in you know 5 to 8% stop out range is perfectly fine, as opposed to some of these stocks that are down more than 50%. There's a lot of people holding a lot of stocks that are down way over 50%. So anyway, yeah, in a precarious spot here, right? Like they tried to rally it and it's coming back down. So, the conventional wisdom was for a rally this week, and if you look, there's Friday's close, and so if we just rally back up to Friday's close, I think that will be kind of a feat. But as you know, last well, not last week, but over the past couple of weeks, I've basically had a trend line across. Whoops. Oh, now I've screwed things up. Let's see if I can fix this. Trend line across the highs. All right. I've had on my chart a trend line across these highs, and basically, last week before this even started, I said, in order for the market to get anything going to the upside, it's a law of nature, but it has to break above this trend line, and that didn't happen. It's been sort of vacillating. There's your death cross, right? Everybody gets worked up about the death cross. That typically happens near a low, and then you rally up towards the death cross, but they just kept this thing going all the way up to there, and it didn't take long for it to trade right back to the lows. And so in the bigger scheme of things, this is a really nasty sort of chart. The best thing that's got going for it is the support. There's some support down in this area. This is just sort of a crude way of drawing it, but there's some support. I hate to say it, but this whole thing, the pandemic sell-off, and then the Fed just going crazy, pumping trillions of dollars of liquidity in. They overdid it to the upside, and then now, they're going to pull all the liquidity back, and so basically, all this resulted in the kind of crazy inflation we're seeing now. And so now the Fed is panicking. They have to panic, and I don't know what they can do, quite frankly, to tame inflation, because I mean, if inflation is 8% or 8.5%, interest I've only hiked a quarter point, right? And then so next week, the Fed funds rate's going to be at 3/4 of a percentage point, while inflation's running at 8. Here's something. Been hearing a lot about bonds lately, right? Look at this. This is muni bonds, municipal tax-free municipal bonds. I mean, they're supposed to be one of the one of the really super safe, investments. Um, Hang on, I'm trying to get my chart to work here. There we go. These charts are not as much fun as the old ones I used to use, but the old charts I used to use are no longer viable. So anyway, take a look at this. Municipal bonds. Ouch. Um, so I don't know, I don't know much about municipal bonds, but I do know this. I did a search because you kept hearing about the bond market, having the worst bond market in a generation or whatever. But so I looked at the municipal. I was like, well, how are municipal bonds doing, right? And anyway, I saw this article that said that like at the end of last year, like municipal bond inflows were the highest on record, or something like over billions of dollars or something flowed into municipal bonds. And boy, it's just with interest rates so low. I don't know how long I've been saying this, but when interest rates are zero, they got nowhere to go but up, right? And so, sure, it took a long, long time, but now here we are, and you've seen the charts. So, 40-year bond market bull is, the tide is turning, so to speak. So, anyway, it's a mess out there, and preserving capital is the key. Look at this, the NASDAQ 100 taking out the year-to-date lows, right? So officially in a bear market. And, and we're right in the thick of earnings season, too. Um, you know, Facebook, the FANG stocks, Facebook, there's the peak back there last fall. Then they got destroyed on earnings, followed through to the downside, bounced, and now back at the lows. And I mean, everywhere you look, I mean, momentum stocks, darlings of Wall Street, favorites, all that kind of stuff, just destroyed. So you take the FANG stocks, take Facebook, and then I'm sure you guys heard about Netflix, right? They peaked last fall too. And so you got two of the FANG stocks absolutely destroyed. Netflix earnings disappointment back in January really hammered the stock. It had a little bounce here, but never really recovered. And then this last earnings announcement, ouch. And so I mean, this is almost surreal, because you'll notice that the high up here was $700, right? I mean, here we are below 200, from 700 to 200, and this is the kind of stock that the institutional portfolio money managers are all excited about. So the furthest I can go back here, I mean, on a daily chart's like 2 years, and so it's a 2-year low. Pretty nasty out there. Google just came out with earnings. Let's see. Oh yeah, see. So, there's 3 of the 4 FANG stocks. 3 of the 4 FANG stocks pretty much hammered, right? What's the other FANG stock? Amazon hasn't reported yet. So, Amazon has not gone anywhere. I mean, it's back to levels that it was, what's that, June of 2020? And so, not a whole lot of progress here. And, of course, Apple. I always forget whether Apple or Amazon is the A in FANG. Apple's getting ready to report, And I saw something this morning that was talking about, all this stuff going on in China, how that's going to affect Apple, and so that remains to be seen. So here's the thing: Microsoft is basically sort of the last. And I mean, Microsoft's down fairly significantly off its high. It's catching a little bit of a bounce here, but nothing extraordinary. Quite frankly, I'm surprised the market itself is not down more. Right? Tesla, um, yeah, lots of going on with Tesla, I guess I should say. Got hit yesterday, but they came out with earnings and very recently here. So anyway, it's just a mess. Basically, one look at the chart of ARC basically sums up the reality of this market. Right? And over the years, I've used different things as proxies for, you know, like I used to love to use the Russell 2000 IWM as sort of a proxy for the majority of stocks. So this is a proxy for, I don't know what, the high growth, high growth momentum stocks, stocks that people loved at any price, no matter what the metrics were, companies that lost money, your Zooms and Teladocs and all the software names and all that type of stuff. And this is just a disaster, absolute disaster. And so it is what it is. But between now and when the Fed actually hikes rates next week, it's going to be interesting to see what happens. So if the market continues to sell off, if it continues to sell down or whatever, it wouldn't surprise me to see there's going to be some sort of a relief rally at some point, but that doesn't mean that the market can't tank first and then have a relief rally, right? Or it could consolidate around the lows here. And then you could get the relief rally after the Fed hikes rates. So I think Jay Powell's pretty much telegraphed that they're just going to go 50 basis points. And so, people like to say, back here they were saying, well, 50 basis point rate hikes priced in, but he was talking kind of tough. So it's hard to know what the Fed's motivation is. I mean, for as long as I can remember, the joke is that the Fed's, only real mandate is supporting asset prices, and then they let inflation get out of control, and so now, I mean, they're just in a really tight spot. So the only solution for the inflation problem is a recession, and I'm not sure that the market itself has priced in a global recession yet. So this could honestly be headed a lot lower. The old three steps and a stumble, right? They used to talk about that. I don't know if that means, three rate hikes or three quarter point rate hikes. So I guess we'll find out. But we haven't even gotten to the three steps and a stumble yet. And then, of course, the other thing is the Fed balance sheet. I mean, they're draining liquidity, or they're planning to drain liquidity, and so this downside party could just be getting started. But the nature of this market is that everyone's been trained to buy the dip for as long as anybody can remember. Get a monthly chart here, and so we're just in a real sort of mess here. Real sort of mess. I mean, there's your prior two bubbles. There's the dot-com bubble and there's the housing bubble. And I guess a lot of people like to call this the everything bubble. And it's the run up from the pandemic lows. You make it pretty scary. If it just retraces, a portion of that, half of it, there's gonna be a lot of wailing and gnashing of teeth. So, very precarious spot here. And of course, there's a difference between looking at talking about longer term macro stuff and the day-to-day price movement. So on any given day, the market can do something really crazy. But yeah, we haven't talked about so many other macro factors out there. The Japanese yen devaluation, the Chinese yen or whatever you call it, renminbi, but Chinese currency, in currency land and in bond land and interest rate worlds and stuff. I mean, there's a lot of turmoil happening, and so the uh, the market being up here is, like I said, it's I like to stay I like to stay somewhat positive over the longer term, but go back to that trend line, and so looking at it objectively, just like I said, the market can't go back to the highs until it breaks that trend line. So it's going to be interesting to see what happens here. Wouldn't surprise me to see some consolidation. I mean, maybe there's a capitulation. Maybe there's a capitulation sell-off. Um, Maybe we consolidate down here. I mean, it could still. Whoops. I'm just going to get rid of that. I'm just going to get rid of that. Maybe it consolidates down in like this zone here, and then when the Fed actually pulls the trigger on the 50 basis point rate hike, well then maybe we rally back up. Maybe we rally back up from lower levels, but I'm just going to say, and plus being right in the thick of earnings season now, it's going to be interesting to see. See, I saw CMG Chipotle reported earnings. I hadn't looked at that chart in a long time. Huh, interesting. Interesting chart. If you the old joke about throwing darts at the Wall Street, if you hung the Wall Street Journal on the wall and threw 10 darts into it, what you'd probably find is that about 70 to 80% of the stocks you landed on peaked sometime last year or last fall or whatever, and are down significantly. So, and they're also, they peaked at some point that was up incredibly from whatever the lows were. There's a few of them that just this Disney chart. Everything seems to be moving slow today. This Disney chart is sort of interesting and unusual, right? The pandemic sell-off and then the huge rally, but I mean, for for Disney to lose this much after the reopening is interesting, to say the least. And I mean, look at this sell down here. So that earnings, that earnings and this earnings here, it's a mess. See, I guess Boeing came out with earnings. They had the CEO on earlier. I didn't actually see what they were, but yeah, Boeing, look at that. What a disaster. So it is what it is. I mean, look at that. The pandemic sell-off in Boeing was extraordinary, from 350 to 100. And then it manages to rally back up, but nothing like the overall market. And then this like slow, choppy grind down, and then today, that's nasty. You look at the monthly chart of Boeing. Look at that, just incredible. So yeah, I would encourage you, get out there and look at some monthly charts. I think GE was another one they were talking about yesterday. Look at GE during the dot-com bubble and look at it now, all these years later. So that just goes to show you some of the stocks that have been sort of favorites over the last couple of years, things will never recover. And then, of course, there's some other craziness out there, like, Coinbase. There was the IPO price, right? The big wigs, the big money was able to buy at the IPO price of 250, and then first day of trading it spikes over 400 bucks. You come back, just not quite a year later, and the thing's trading for 125 bucks. Robinhood, there was news on Robinhood. They're laying off some of their workforce, same sort of thing. So these IPOs, it's just absolute disaster. Let's see, there's an IPO ETF. Yeah, the Renaissance Ipo ETF. Look when this peaked back at and I remember a lot of, wacky IPOs coming out too. I used to talk about that. I mean, a bunch of times last year I mentioned how, a lot of this reminds me of the dot-com bubble. Well, there you go. I mean, the run up of the IPOs after the pandemic sell-off, when the Fed created trillions of dollars out of thin air and threw it at the problem. Um, there was a stock, what was it? Bumble, BMBL. Let's see how that's doing. I remember when this thing IPO'd, I remember thinking to myself, all right, this sounds like, what was going on during the dot-com days. It's a dating app, Bumble. And look at that. First day of trading, 70, 80 bucks. And then, yeah, they must have had some good news here recently, but just a disaster. So everywhere you look, was BuzzFeed? Yeah, BuzzFeed IPO'd. So, then, back when all this craziness was happening, there was a lot of warning signs out there. There's tons of warning signs. And so it is what it is, but right now we find ourselves in a very precarious situation, and it's going to be interesting to see what happens prior to the Fed raising rates, and then I guess it's not going to be about the 50 basis point rate hike. It's going to be about what Powell says and how hawkish he is. And so if the market's still hanging around these lows when Powell speaks next Wednesday, if the market's still lower than this or down around, I'd say, under 430, maybe even under 440, but somewhere, if the market's below, 4,300, 4,400, my guess is that, they'll raise 50 basis points and then he'll, sort of backtrack a little bit and say something like, while we expect rates to rise, we're all never on a preset course, and risks to the outlook and all this kind of stuff. So I don't know. But the one thing is that they could just keep pressing him on inflation. So anyway, all right. Well, enough macro talk. There's not much else to talk about because right now, other than some really quick trades, maybe intraday or a day or two for a bounce with a stop loss, there's not much else to do, and got to be really super careful in this environment. And expect to get stopped out, right? So I kind of think that sitting on cash, sort of waiting for things to shake out a little bit more, might be the best option here. And with that said, I will see you back here next week, same time, same place.